Hey there, Brian Harris with Harris Mortgage coming at you with the June monthly mortgage update. Let's get started. I'm just grabbing a quote from a rate sheet of a lender I'm approved with, but your situation might differ. There's a lot of inputs, so this is not a rate quote, just want to facilitate conversation. So for the last 6 months, we've seen rates move higher every month. So sometimes it's been a small increase, other times a large increase, but for 6 months, rates have moved higher. So for the first time, we've seen a monthly decline in rates in the last 6 months. So even though it's ever so slightly, it was a decrease, and it is welcome for everyone's just getting fatigued by these higher and higher interest rates. Now, you'll remember last month I talked about the Fed was going to increase the federal funds rate by 50 basis points, by 0.5%, but that it was expected and priced into the market. So you can see how that is the case, because in the last month, the Fed increased rates 0.5%, but mortgage rates declined by 0.1%. So that increase was priced in, and that's sort of how that works. So the mortgage market is forward looking. The Federal Reserve has influence in interest rates, but it doesn't set the mortgage rate. So you can see this chart. This year, we've had an increase in mortgage rates over 2%, and the Federal Reserve has increased rates 75 basis points. So they've increased it 25 basis points, followed by 50 basis points. Now, they're going to do 2 more 50 basis point increases. That's going to be at their next meetings, announced on June 15th and July 27th. So, it's not 100% that that's going to happen, but that's what's expected. So, at that point, we're not sure. So, in the coming rate announcements, after the announcements, the Federal Reserve Chairman Jerome Powell speaks, and if he tips his hand about, we're going to move faster or more aggressively, or we think we're getting towards the end, that's going to influence the interest rates. But right now, it's priced in. We're going to have 2 more 50 basis point increases, and then, in future months' videos, I will convey kind of the vibe I'm getting on what's going to happen next. And then next, what I'm going to do to try to bring to life what these interest rates mean, so I'm going to put 2 scenarios: a conventional purchase and an FHA purchase. And you can pause the video if you're interested in really checking them out, but it's going to just show what a payment would be for a scenario, which is not a rate quote, and your scenario could be quite different, but it's just to bring to life a little bit what the payment would be for a specific interest rate we're talking about. So you can check that out by pausing. And then each month, in addition to rates, we're going to talk about just some hot button issues or breaking news in the industry. So this month, I'm going to talk about ADUs, updated AMI, perspective, and what's the best time to buy a house. ADUs, auxiliary dwelling units. You can think of this as a guest house. There's some new rules just came out by Freddie Mac, one of the 2 arms for conventional lending. I expect Fannie Mae to come out with something similar. But previously, if you had an ADU on your property and you rented it out, with very few exceptions, you were not able to use that rental income to help you qualify. So what's changed is now you are able to use rental income from an ADU on a single unit property, your primary residence, to help you qualify. So there's some stipulations. You have to get an appraisal. One of the comps has to be a property with an ADU. There's limitations on how much rent you can use, but it's a positive development. It's a movement in the right direction where people who are renting an ADU can now use that income to qualify on a primary residence. Also with ADUs, previously you could only get financing if you had an ADU on a 1-unit property. So if you had a duplex or a triplex with an ADU, that was not a property that you could obtain conventional financing on. So that's changed. So you can also get now conventional financing on a 2 or 3 unit property that also has an ADU. So that's also a positive change. AMI. So area median income. Several loan programs, the two that come to mind are Home Ready and Home Possible, are loan programs that give you lower interest rates and lower mortgage insurance rates. But in order to qualify for these programs, you have to be under the area median income. Sometimes it's the low, mid, or just the general area median income, AMI. But the news is that those limits are being increased. So it'll now allow for more people to qualify for those loans, such as Home Ready, Home Possible, and a handful of others. So this is also a great development. Next, I wanted to say something real quick about perspective. So there is a concept called the recency bias, and that's where you focus on what's happening in the very near term. And so what I have here is a chart of the last 6 months, which is pretty ugly for mortgage rates, where they've just kind of chugged higher. But it's nice to pull back, look at a bigger perspective, and you can see that over time, these rates are still on the low side of historically what mortgage rates have been. So I went ahead and calculated an average in the 70s. The average mortgage rate was 8.9, 12.7 in the 80s, 8.1 in the 90s, 6.2 in 2000s, and it is actually lower than it is now in the 2010s. But it's just nice to take a step back and realize, okay, these rates are higher than they've been, but it's not completely bonkers. Lastly, I read this and it resonated with me, so I thought I'd repeat it. And I read a reply to the question, when is the right time to buy a house? So one is you're going to remain in that location for at least 10 years. So 10 years might be too long, but the concept is that you're going to be in the area for a while. And your personal and professional life is stable. So you have a job, you're not about to change careers, you're not about to get a divorce or get married. Like you're kind of set. That's a good position to be in. And then lastly is that you can afford it. So what I'm not going to talk about is interest rates, because all your friends have bought a house, or because your realtor or your parents say you need to buy a house. Like, those aren't the best reasons to buy a house, but you're going to be in an area for a while, you're stable, and you can afford the payment. 3 great reasons to buy a house. You can replace your landlord, because if you're paying rent, you're still paying a mortgage, it's just not yours. So if you can replace your landlord, I think you should. Granted, you're going to be in the area for a while, things are stable, you can afford the payment. If you meet these 3 criteria, I do think, even given the run up in rates, that it's still a good time to be looking to buy that first home. Okay, that's all for this month. I'll catch you next month. If you like these videos, if you could like and subscribe, then if you subscribe, you'll get a notice each month when a new video is posted. So post any questions you have, or